If you're between 35 and 55, you've probably been told it's too late to grow your wealth exponentially. You might have been told that compounding only works if you start in your 20s, or that your best chance at financial freedom has already passed. That's not true. What's changed is the compounding curve itself, a new approach that works faster, smarter, and more efficiently than the old rules ever did. The traditional view of compounding, putting money in an account, waiting decades, and hoping it grows, is outdated. Today, with strategic investments, automation, and digital tools, adults in their midlife years can create exponential growth in far less time. The key is understanding how this new compounding curve works and how to apply it to your money, your skills, and your time. The first thing to understand is that time is still your ally, even after 35. While it's true that you have fewer years than a 25-year-old, modern compounding doesn't rely solely on waiting decades. It leverages higher yield opportunities, reinvestment strategies, and intelligent automation to accelerate growth. Adults between 35 and 55 have an advantage that younger people often overlook. They typically have higher income, better career stability, and clearer financial priorities. By combining these factors with a smart compounding strategy, it's possible to generate wealth at a rate that feels impossible if you're only thinking in terms of traditional savings. The second point is that the new compounding curve is multidimensional. It doesn't only apply to money in a bank account. It applies to skills, assets, relationships, and digital leverage. For example, investing in your career or learning high-demand skills can compound your earning potential faster than almost any financial instrument. Similarly, leveraging digital tools like AI, automation, or online businesses allows adults to multiply the output of their time without working longer hours. The compounding curve today is not linear. It's exponential if approached strategically. Each small action you take in the right direction creates a ripple effect that grows faster than simple interest ever could. Step 3 involves focusing on high-impact assets. This means concentrating resources on things that generate exponential returns rather than spreading them thin across low-yield investments. For adults 35 to 55, this might include targeted investments in real estate with cash flow potential, dividend-paying stock, index funds with strong historical performance, or even private business ventures. The key is to identify assets where reinvestment accelerates compounding. Unlike simple savings, which grow linearly, these assets grow in value while simultaneously producing income, which can then be reinvested to fuel further growth. Another crucial aspect of the new curve is automation and systemization. Adults in midlife often juggle careers, families, and responsibilities, so time is limited. Compounding no longer means manually reinvesting every dividend or managing every transaction. By automating contributions, rebalancing portfolios, and using financial tools, you allow your money to grow consistently with minimal effort. The modern compounding curve favors those who remove friction and create systems that work while they sleep, travel, or focus on other priorities. In essence, automation amplifies compounding, turning limited time into a multiplier for your wealth. The fifth principle is strategic reinvestment. Many people make the mistake of enjoying their gains too early, spending profits instead of letting them grow further. Adults 35 to 55 often have higher cash flow and a better understanding of financial discipline, which allows them to reinvest earnings intelligently, whether it's adding more to a dividend portfolio, acquiring additional rental properties, or investing in digital businesses that produce passive income. Reinvestment accelerates compounding dramatically. New curve is steepest when profits are consistently put back to work instead of being consumed immediately. Next is risk optimization. Unlike younger investors who can tolerate high volatility, midlife adults benefit from balancing risk with security. The new compounding curve doesn't rely on gambling or extreme speculation. Instead, it focuses on calculated risk, diversifying asset, maintaining liquidity for opportunities, and hedging against downturns. This approach ensures that compounding continues steadily, even in volatile markets. Wealth built this way is resilient, sustainable, and scalable, which is why adults 35 to 55 can see faster results than they might imagine if they follow outdated advice. The seventh point is leveraging technology and digital assets. The new compounding curve isn't restricted to traditional investments. Adults today can benefit from digital opportunities, creating online businesses, monetizing skills through courses or coaching, investing in AI-driven tools, or building automated sales funnels. Each digital asset can compound in ways physical assets cannot. For instance, a well-designed online course can sell continuously with minimal maintenance, generating income that can then be reinvested into other high-yield ventures. This is modern compounding in action, turning 1 hour of effort into continuous growth over months or years. The eighth principle is continuous learning and adaptation. Compounding isn't only about money. It's also about your knowledge and decision-making skills. Adults who consistently educate themselves about finance, business trends, investing, and personal development compound their ability to generate wealth. Every smart decision builds on previous knowledge, creating a mental interest rate that accelerates financial growth. Unlike money, this kind of compounding is limitless and can dramatically influence your long-term trajectory. Those who fail to learn compound mistakes, while those who commit to mastery compound success. The ninth and final point is mindset alignment with long-term outcomes. True compounding requires patience, discipline, and the ability to think in years, not months. Adults 35 to 55 are often more capable of long-term planning than younger individuals, but they also face life pressures and responsibilities that can distract from wealth-building goals. The new curve emphasizes aligning daily habits, spending, and decision-making with long-term outcomes. This includes prioritizing investments over consumption, delaying gratification, and thinking strategically about how each action contributes to exponential growth. Mindset is the invisible force that determines whether your compounding efforts accelerate or stagnate. The psychological advantage of the new compounding curve is significant. Traditional thinking assumes that if you didn't start young, compounding won't help. Modern compounding proves otherwise. Adults 35 to 55 have access to higher incomes, smarter financial tools, knowledge, and the ability to leverage both digital and physical assets. When applied consistently, these factors can create a compressed compounding timeline where wealth grows faster than the old rules suggested. It's about working smarter, not longer, and letting every decision build on the previous one. By applying these principles, focusing on high-impact assets, automating contribution, reinvesting profit, optimizing risk, leveraging technology, continuously learning, and maintaining the right mindset, adults can unlock a compounding effect that accelerates rapidly, even starting in midlife. The combination of experience, discipline, and strategic leverage is far more potent than youthful time alone. What was once considered late is now the perfect time to harness modern compounding strategies and secure long-term financial freedom. In conclusion, the new compounding curve shows that adults 35 to 55 are in a unique position to grow wealth faster than ever before. By understanding that compounding isn't just about money, but also about skills, systems, automation, and mindset, you can achieve exponential growth without taking unnecessary risks or waiting decades. Small, strategic actions compounded consistently create results that seem impossible if you only think linearly. This is a roadmap to financial freedom, one that relies on intelligence, strategy, and modern tools rather than luck or youthful advantage. If you're in the 35 to 55 age range, it's time to rethink what's possible. You don't need decades to grow wealth. You don't need luck or risky speculation. By understanding and applying the principles of the new compounding curve, you can accelerate growth, optimize your resources, and create financial freedom faster than traditional advice suggests. Start today by identifying high-impact assets, automating your investment, reinvesting, profit, leveraging technology, and aligning your mindset with long-term outcomes. You're watching Passive Income Pro, and now it's your turn to apply these strategies, accelerate your compounding, and build wealth smarter, faster, and more efficiently than ever before.